Welcome traders to another episode of T2 SMC Trader. So in this video you are going to learn the trend is your friend. This thing you are going to learn again. Though I have already explained around the AM session live streaming how to trade this market. But in this video I'm just gonna explain the PM session, and at the same time you will learn how to trade the trending day. So over here I am in 1 minute chart, and I'm just going to explain the price action from 1 minute chart, as you don't need any kind of higher time frame in Wednesday and Thursday. When the trend is confirmed, you don't need the higher time frame. Okay, don't worry, I will explain this entry as well, where you don't need any kind of market structure shift. This is called my first fair value. I will talk about this one later. First, let me explain the price action from the PM session. Make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. This is the blue line. Look at this blue line. This is the starting of today's PM session. Now, the trending day, how it is actually work. Market will go lower. It will make some buy side liquidity. It will take the liquidity, market structure hit, fair value gap, fall. Same thing. It will keep repeating. Okay, this is how you will trade the trending day, and the trending day is actually the Wednesday and Thursday. This is about that extreme sell side liquidity. Until this sell side liquidity is not taken, I'm bearish. Here, when market has made this liquidity, but if you take a closer look over there, this high has been taken over there by that high. What is that? Shallow run. That means this is the obvious liquidity. Now, this obvious liquidity is gonna be taken later, but first it has to take sell side liquidity. That should be your expectation. Okay. This is the price action around the lunch hour. So I'm not interested to talk about this lunch hour price action. After taking this high, that high has taken over there, market fall dramatically. Are you going to take entry from here? No, you are not going to take the entry from there. Why? Because this is the lunch hour. This is the starting of the PM session. What happened around that PM session? You can see this high has taken by that high. Okay, so let me mark this one. So market has already taken the buy side liquidity around that area. Liquidity has taken over there. At the same time, if you see over here, the swing low, this swing low has traded this fair value gap, and you got the market structure shift over here. This is your market structure shift. Now you know where market is going. Market is going for that sell side liquidity. Where is your sell side liquidity? This is your sell side liquidity. When you got this market structure shift, do you have any fair value gap? You have the entry fair value gap, and that is your entry fair value gap. Where is your breakaway gap? There is your breakaway gap. Just let me mark the breakaway gap. I'll tell about this. Okay, just let me mark this one. You are going to take your entry over here, and your stop loss is going to cover the breakaway gap. Your target is here. This should be your thinking. Now over here, I would love to tell you that don't do that. Instead of that, if you would love to push a button from there, cover just the constant engrossment. Why? Because the stop loss is too big. Now if you're trading your macro account, there's nothing wrong. You can put your stop loss above that breakaway gap. Now over there, this is the extreme liquidity. What did I tell you about the extreme liquidity? If you ever see the extreme liquidity, never ever target over there. Even if you would love to target that extreme liquidity, make sure that you have taken some partial. Now where you should take the partial? Let me go to the previous price action over there. Around that area. Okay, so look at this price action around that area. You see this week is so obvious, so just mark the 50% of that week. So from there to there. Okay, so this is the 50% of that week. I'm going here, coming here. You can see that market is here. This is the 50%. Now you can say, brother, it's a very small range. I know it's a very small range. Let's mark actually how many candle is over there. So from there to until there, 3700. Brother, are you telling me that this is a small liquidity? No man, it's not a small range. 37 is more than huge. Take a partial over there, then put your stop loss to the break even and hold your trade until the extreme liquidity. Then in time you can trail your stop loss, and maybe later you will get a stop out. As you can see, market never take that extreme liquidity. It's okay. Market doesn't need to take the extreme liquidity, but make sure that you have taken the partial. So that entry has provided you almost how much it has provided. 73 handle, man. Trust me, you don't need to catch the huge. Just 30 to 40 handles, more than enough. Okay. So after coming here, market started to go higher again. Okay, when it is going higher, are you going to participate in that price action? No, you are not going to participate in that price action, but you know there is your obvious liquidity. Are you going to target that obvious liquidity? No, you are not going to do that. If market take that liquidity, you will be happy. Okay, market has taken that liquidity, there is nothing wrong. Then you will start to look for sell again. If it doesn't take that liquidity, that is also cool. You don't need to see that. Every single time market is going higher, you will start to look for lower market structure shift. If you get that lower market structure shift in a trendy day, you will take that entry. Okay. Over here, this is the sell side liquidity. Until this sell side liquidity is not taken, you will keep looking for sell. When market is going higher, you didn't do anything. Now finally market reached around that area, and you can see that there was no lower market structure shift. That means market didn't make a swing low, then shifted. Just no setup were there. The sell setup wasn't over there. Okay. You can say, brother, this is my market structure shift over there. This is my market structure shift. Now, this is not valid market structure shift. Why this is not valid market structure shift? First of all, this is not a swing low. You have to understand what is swing low. This is not a swing low. Look over here. This is a swing low. See the swing, but here this is the sideways candle where this candle is little lower. This is not swing low. This is just a sideways candle. Okay. Then market actually never gave you the market structure shift. Here, that was my first parallel gap entry. What do I mean by that? I have seen that market has taken this buy side liquidity. Okay. So over here, market has taken this extreme high. It has been taken over there. So all the high has taken over there. After taking all the high, market was falling. I had nothing to do. I was just watching this price because there was no setup. I was just looking for a lower market structure shift, but I never get it. Then market went higher again. Take this liquidity around that area. This all the swing high has taken over here, failed to take the extreme high. This high has traded that fabric gap, which is the entry fabric gap from 1 minute chart. This high, okay, did it trade the entry fabric gap or last fabric gap? That is important. When it has traded that, then this high failed to take that high. I got my first fabric gap. This candle closed below this line, below this fabric gap, tap to this fabric gap, I am already in the market. Where should be my target? Now my target should be the entry fabric gap. So over here, this is my entry fabric gap. As market has been traded a lot of time over there, this entry fabric gap, I would love to go for the last fabric gap. And if I am overzealous, maybe I will go for the relatively equal lows. Now here is the another part. Look at this blue line. That line is 349. That means no entry no trade should be held after that line. If I take that entry over there, I have to close my trade when market will tap to this line. Okay, so around that area I will close my trade. Now you can say, brother, I'm telling this for all hindsight, but this is my Twitter. Okay, so in my Twitter, first I tweeted this, who can explain this entry? Okay, that was that first fabric gap entry, and then I told, look this screenshot carefully and tell me, is that boom valid? That boom wasn't valid. That was my first fabric gap entry, but that boom wasn't valid. The only reason is over here you can see it is after 349. So no entry, no trade should be held after 349. Though I knew that market is reaching over there, I can't hold it, so I have to close it maybe at the break even or around that area. So in this PM session, all I can see, I had sell setup around that area. So this was the only sell setup around that area. Now you can say, brother, why you are not going to take that buy? Look over here. That was also a buy setup or something like that. Did it work? No, it didn't work. Here market was overzealous, so it worked over there. But here it didn't work. But if you keep looking for the sell, trust me, you will keep taking the winning trade. So that was a very small hindsight for this PM session. If you think that it is insightful, please don't forget to give me the thumbs up and subscribe to my channel. So guys, until the next video, cheers.